Is China giving a big FU to Trump selling US bonds? So I know I wake up at 2 o'clock last night and checked, US dollar, S&P down 5% at that point, and you think, oh my God, it's going to crash, and then it doesn't, and then all of a sudden we start climbing the wall of worry and we have a rally for a few months.
Hello and welcome to this week's Closing Bell. It has been an unbelievable week in markets since we were with you this time last week, and it just seems incredible how much has happened, Murray, in the space of a few days. You've been talking about a sell-off for quite some time, but I don't think even you expected just how fast it was. It's been. It has incredible. Been a huge volatility roll through the market. So we have a really big discussion to put on the table. First of all, we talk about what is the grand plan here? Is Trump a genius or a nutcase? Or then what's all the effects that are ricocheting? And the important point to say is at this point the ASX is, what is it, 2 trillion or whatever it is, which is nothing compared to some of the big markets that are moving now, like the US bonds, US stocks, the currencies. So Murray's going to walk us through all those charts, and then we'll see how things shape up on the long-term chart that you've been tracking now for the last couple of weeks. So lots of interesting stuff. So first of all, the whole, I don't know if they're memes or discussion or what you call them, is Trump gone big to flush out China as the bad actor, or has he made a terrible mistake and didn't expect the response that he got? And nobody really knows what to make of this, and they've sort of come out to cover their tracks by saying, oh no, we wanted to flush out China, and all the people are approaching us with deals now. Do you have a view on what the plan is, or is there a plan?
Well, I think he blinked right at the point, and it was on that day when the US bonds started to really sell off really badly. Because if you got the US stocks and US bonds sort of crashing, that's really bad news. And we were actually on a point of if the equities went lower than where they opened on Monday, it was looking to me like it could fall another 15% in a straight line. So I think he's probably pretty shell-shocked by what was going on in the markets, and things were breaking, the basis trade in the US bonds, that sort of thing. And I'm really wondering, is China giving a big FU to Trump selling US bonds, or do they need to do it? As we'll see in a second, the Chinese yuan is really resting on a precipice where they've been intervening in the past. So the past 3 years, you'll see that it's just been holding at this level. And the US yuan, is it going to devalue? And are they selling US bonds to support the yuan at the moment? Or are they selling US bonds just to say, up yours? And it seems to be selling off in the overnight markets, which is a bit weird, because if you've got $1 trillion of US bonds, do you want to sell them in the overnight market, or do you want to sell them in the day session when you've got 10 times the liquidity? You'd be doing it in the day session. So if you're doing it in the overnight session and pushing that market really to a point where it's looking dangerous, possibly you're doing that on purpose. You're trying to crack things. And that's a way of them, they're a big debtor to us, or creditor. Well, we're the debtor nation, whichever way you say it. It's some pretty big things that are going on, and the US dollar is getting smoked, and it's resting on a precipice of 100, where it's the DXY, the US dollar index. I'll show everyone that in a minute, where that is. And the US yen is really cracking. So it's all turned back down. It's looking pretty sketchy, especially when you look at that US yen, you look at the US dollar, where it's resting on a precipice where it can actually really collapse from here. And you've got the US bonds are actually still selling off in the overnight market and are up above 4.4%, the US 10 years. So it's all looking pretty tenuous. And, in this gig, sometimes people think we should have a view every second of every day, knowing on all markets what they're going to do next. And it's just not like that. We're at a point now where the volatility is so high that really, for me, it's the point of going, wow, you've got to watch out. I still think the highest odds are that we're getting close to it, or that we may have already seen the low, and we're just seeing lots of volatility before it is ready to have a big short squeeze, which could last for a few months. That would be usually the highest probability outcome from here. But the lowest probability outcome, which is that it actually cracks underneath that level, you might say that's a 1 out of 10 chance. But if that does happen, you're looking at
Well, do you want to bring up the
really
chart
bad move.
of the ASX just to put a face on it, if you like, of where the market could settle? We were talking about
why
this.
not the S&P?
We can do US, probably the leading market.
Because we've got quite a lot to get through today, so I'll try to just whip through it and not crap on as I usually do for too long.
The volatility's come from, first we had the Liberation Day announcement with the tariffs, then he's walked it back in the space of a bit, but he's also going hard on China. So this is an ongoing thing, and we don't know how this is all going to
And
run.
markets are destabilised, so they're very much out of balance. So you've got to think that sometimes you've got the news that sets off a catalyst that sets off destabilisation. But once it's destabilised, once you've had really big moves, once volatility goes above a certain level, you have certain strategies out there that are leveraged and that could end up being forced to deleverage and to lower their positions, like momentum chasers.
Absolutely.
There's also leveraged, I've even forgotten what the name of the strategy is, but where they actually leverage up to have a pretty balanced portfolio with bonds and stocks, but then they'll leverage that up. And because usually the correlation between the bonds and the stocks is opposite each other. And so that all works out really well. But when the correlation on stocks and bonds goes to 1 and bonds are selling off and stocks are selling off and you're leveraged, all of a sudden the strategy that's worked for years can just go negative very, very rapidly. And then you get forced deleveraging out of those sort of positions. So then you just get, so it's not really the selling is because of, Trump's done this or this is revaluing. It's huge strategies that are in the market that are leveraged, that have been traveling along fine for a very long time, that are forced to get out. So same with the carry trade. I've been saying that the US yen could be heading to 140. So let's just jump to the charts and have a quick look at what's happening. So very quickly, this is the S&P 500. We know that was the last rally. We know that was from 2022 to 2025. And this is where I'm saying the old all-time high, which was there, which is also equivalent, funnily enough, to the midpoint of the whole wave higher. Massively important level. And that was where we opened on Monday. So for me, it's like if the market turned back underneath there, that's when there's a bit of a vacuum. And I actually do think there's a chance underneath there of a pretty quick move.
And we should say that up here at this run, US stocks were very expensive. So
yeah, exactly.
It's a long way down before you could say their value. Isn't it?
Yeah. And maybe down there the PE, forward PE will be 14 or something like that. And a lot of these corrections have ended with a PE around that sort of level.
Historic sort of average.
So, but just from a pure technical level, the way I look at things, these waves, the midpoint being so important, and the low this week was exactly on that. We've bounced, and look, all of this volatility may all happen above that low from Monday, and then eventually we will see a rally for a few months. But then up there, you've still got a lot of resistance. So the long-term view of this, we may see a rally for the next few months, and then growth may turn down, and we may actually end up breaking below there anyway, and that may be in 6 months. Right, so that's one option, that we could still be going lower, but we'll have some sort of a recovery in the short term.
Well, sorry to cut you off there. I was going to say an interesting point that a friend of mine, Gary Norton, made. He's a long-time trader and market participant, and he said this time is different to previous sell downs in stocks where the Fed is a little bit off to the side here without the helping hand of saying, oh, we can step in or we can do this and da-da-da-da, because Trump's put them offside as well. So it could say destabilised for quite a while.
Yeah, well, where is the Fed put? We found out where the Trump put sort of was, with markets on the edge of crashing, and he's backpedaled. But there is still a big issue with China. Australia certainly needs China. But also with China, if they can't sell to the US, do they then flood the market, the rest of the world, with their products that they can't sell to the US? And they sell them at a discount, and Australia starts picking up well, we get the disinflation from all of that anyway, but also if they're capital goods, if they start selling us capital goods a lot cheaper, do our businesses actually benefit from that their returns go up because they're buying all these cheap goods? So that might be good for Australia to some point. But also, if China really devalues, if things start going a bit pear-shaped in China, that's going to have flow-on effects to us as well. So just with the US, that's just my position right now. If it goes back under those lows from Monday, I am actually wary because of what's happening in the currency markets. So let's quickly jump to that.
And this is what we alluded to earlier, where these are big markets now, US dollar.
Yeah. This is the big money is moving now. And that's why with the US bonds doing what they're doing, what I'm wondering is, here is the US dollar against the yuan. And that is the high for the last 3 years. So you could say that's the point in the line in the sand for the Bank of China to People's Bank of China, where they step in and support the yuan. They don't want it weakening below there. So it's at a point where it's really holding at that level and probably should do this. So it probably should devalue further based on what's going on.
And as I understand it, this has been brewing for a while. I mean, they've had deflation over there, the property crisis, this type of thing.
Exactly. So are they selling US bonds supporting the yuan at the moment? Are they selling US bonds just to give Trump the middle finger, just to destabilise the bond market? It could be both. So these big undercurrents of what could be going on, which is why those US bonds are selling off. And so we're looking at that point where it's like, wow, is this going to devalue anyway, no matter what they do? How many bonds are they going to be happy to sell to support the yuan where it is right now? And also then looking at the US yen quickly. So I've been saying that my target on the US yen is down to 140 and it was up at 148. So if I just go into the weekly for this so you can see what's going on in the short term. Right, so here it is, the US yen. This was the big sell-off that we saw in August last year. Then we got the recovery, big rally in the markets, which goes where? Went up to the sell zone of this down wave, right? So perfectly turned down, and I was saying around this 152 to 150, I was saying watch out here. If that starts turning down, I'm giving targets back to that 140 level. And this is where you've got possibly the unwinding of carry trades, which is selling the Mag 7 stocks and possibly selling US bonds, because they may have had US bonds. Because I was wondering whether they were selling the Mag 7 stocks recently and buying US bonds. Because remember, the bonds were really rallying.
Yeah, they were.
They were. So is there money coming out of the Mag 7 stocks going into US bonds, which saw a big rally, and now they're selling the US bonds and buying back the Japanese yen to pay back those carry trades? So that may have been a couple of steps that they've done. They said, let's sell the Mag 7, let's put it into US bonds, that they're rallying, and then now that it's turning off, now that the bonds are selling off, they're losing money on that. So maybe they're now forced sellers of those bonds, and they're now repatriating back to Japan to pay back those loans. And you have this US yen getting smoked. So how much further down does that have to go if this really cracks? And then you look at the US dollar index. So here is the US dollar index, and this is where I'm now saying watch out big time on this, I'll actually just get rid of that so that we've got a nice big chart for everyone to see. So this is the US dollar index going back to 2015. This is 10 years of trading. So this 100 level, obviously it's a 100 being just psychologically a big level. But going back, that was the old high there. And you can see it spent a lot of time holding below this 100 level. It even tried to break above it and couldn't, failed again. So it spent all this time below this 100 level. Again, another attempted break above, couldn't do it. And so that's like years of trading to 2021, where that 100 level was massive resistance. So it's broken above it there.
Look at that rally.
Had a big run, right, back in 2022. And that got snuffed out. Where did it go back to? Again, the 100 level, right? So for the last few years, it's been holding above that 100 level. And people will remember, now if I just go shorter term, the rally that we saw here, So I'll actually get rid of that. I just want it to be really nice and clear. So we've got this run in the US dollar, massive run. Where's the midpoint of that? That is, I'll actually get rid of that. So you can see the midpoint of that wave, again, coming in very close to that 100 level, about 102, right? So price action has been holding in the top half of the range for a few years. And the resistance, of course, coming in, there's your sell zone. And this is why I was saying to people, I actually called the US dollar a sell up at about 107 once I got the sell pivots and the momentum turned negative, and said, look, watch out, this is going back down towards 100. So now we're at the point where we're moving to the next level beyond that. So just in the last couple of days, we're seeing that US dollar start to get hit. And what I'm looking at is how many stop losses do you think are below this 100 level from people who have been buying in here? This area below here is pretty much stop lossville. So this is now at a point where this US dollar literally could just do this.
Well, and this
Bang.
gets back to the tariffs, that if you block the trade, then you're blocking China and the surplus nations of accumulating those dollars and reinvesting them.
Yeah, maybe that's part of the bonds selling off, because usually you have that recycling. You sell lots of goods to the US.
The old petrodollar
Yeah,
kind of
petrodollar
dynamic.
idea. Yeah, you sell the US lots of stuff. They give you an IOU in the form of US bonds, really.
Yeah.
That's sort of what's going on. That's what China's been doing. And if China's trade with America is going to go down to zero, or what, it won't, of course, but it's 13% of their exports or imports
big numbers,
from
yeah.
China, which is big. So if that really collapses, that's a lot less money being recycled into those US bonds. So maybe that's part of the weakness in these bonds. But the US dollar right now, for me, is looking like it's actually just on the edge of a really serious fall. So is that saying maybe that we're seeing and gold going through the roof now as it is? And what effect is that going to have if this US dollar actually goes into a bit of a free fall, and that US yen?
Talking of oil, with oil getting hammered, that means the Gulf states are accumulating less dollars, and then they've got less need to put it back into the US and that type of thing. So
Yeah, well, I mean the oil. I've been looking at it from the Brent crude point of view, and I've been saying pretty steadily for quite a while now. And this is a similar thing to that US dollar, where I'm saying it's been supported there for years. And I was saying, look, under $69, watch out in oil. That's where all the stoppies are going to be lined up under here. And look at that. It's been absolutely smoked. And, how long will it take? I think ultimately, look, it could actually even head all the way, surprise to the downside. But I think long term, that could be awesome buying. So people have got to be thinking, this is big moves happening. Stand out of the way and be a bit careful. The volatility here is really huge, where I'm even saying, look, I don't know every morning when I wake up, is it going to be up 5%
this is the thing with
or
trading
down
in Australia,
5%?
because you go to sleep and you just don't know what you're going to wake up to.
It's just bananas. I know I wake up at 2 o'clock last night and checked, and US dollar, S&P down 5%. It's like, it's just...
Did you check the footy scores as well?
Well, Cats had a good game. So, all of this stuff that's going on is pretty big. I guess this is where I'm saying, like, if I go into the daily...
well, let's just walk it back. If we're thinking ASX at this point, it's like, if you're watching this and you're... not that we give advice on the closing bell, but you're saying, is now the time to step into the market? Is now the time to acquire some things? So it depends on your time frame. I mean, if you're willing to withstand the volatility and you know your stock, well, then maybe you could consider buying a few and see how they trade. We were talking about a couple of ideas that are not down today when the market's going down. So watching for those ideas of strength is also good.
I've got a few that are going well, and the defensive side.
And we should say the gold stocks are still going
Gold
up.
stocks are flying. I've got a few. We're in let's say Telstra and Woolies, which are really defensive, and they're actually going up. Telstra, in fact, looks like it's going to break out above. I wrote about this on Fat Tail Daily just a few weeks ago, saying Telstra looks like it's going to break out above 445, and it's up there now while everything's collapsing. So it actually looks like it's going to take off. So there are a few things that are running, and there's no doubt about that. But most are just still. I went through top 200 yesterday. So many stocks still look terrible. So it's not over yet. So if we're looking at the ASX 200, so here we are, and looking at that 15-year, as I've been saying, there's the way that our market moves. It's sort of like the long-term growth aspect. We've got these, when you've got the channel, I guess, going through here. When it's up the top, you're going watch out. So you can see where it is. The trend is now down. Okay, it could bounce from here, but really, until it sort of fails a bit more than this, is before I'd be saying, oh, wow, this is definitely good buying. I still think there could be some pretty sharp...
A lot of richocheting things going around.
And things can change. Next week, I could become a bull.
And literally no one's got any idea of...
Yeah, it's like that. I don't want to have a view. I want to say, look, it's set up in a way that if we do go down, it can really get smashed. Like it could be crash type of scenario, and where the currencies are going at the moment, what's going on. It's like there could be really big money that's before sellers.
And then you're getting a lack of confidence. Like, who's going to step in?
Yeah, it's just a deleveraging in the system that could be going on, where you've got all these different strategies that are like, we've just got to get out. Volatility is too high. The correlation between bonds and equities is getting too high. All these things.
There's no safe
and when they set off, it's just like, we just got to get out. And so it's not necessarily the tariff thing being the be-all and end-all. It's just that's the thing that sparked the destabilisation in the market and the deleveraging that's going on. So
we should say you brought up just off camera there, the Swiss franc, which is starting to get a strong bid, and that's always a classic sign of when people are really worried. That
exactly.
They
are they selling out of US bonds and repatriating money? It's going elsewhere out of the US.
I remember in 2011, 12, I remember the Swiss bank, this currency was getting so strong that they started to just like throw money at it to stop people
massive interest rates.
Get out of the euro.
They were charging people to put money
their money
with them.
there.
Yeah. So it sort of feels like like I've been saying, it feels like we're near a correction low, short-term correction low, and it can look like this where it's really volatile at that point, and you think, oh my God, it's going to crash, and then it doesn't, and then all of a sudden we start climbing the wall of worry and we have a rally for a few months. 9 times out of 10 in the past, I'd say this is where we're at, but that 1 out of 10, if it does actually crack beneath those lows from Monday and sells off hard, and we see the US currency going under 100 and getting absolutely hammered, the US yen showing you that the carry trade unwinds are happening and probably are huge. So if all of that starts happening, I'm really sort of saying, well, just let's see how far down it can go. And if you are buying, like if you are thinking as it's selling off here, let's have a crack, I'd be having a stop loss sort of under those Monday lows.
Yes.
Pretty much.
So if you're short-term trading,
So the risk-reward point of view is I'm probably a buyer on this weakness, but with a stop loss below those lows to run away, because if it goes under there, it can really get quite sketchy.
Ugly, yeah. Well, a big week certainly coming up. So all we can really say is at the moment the market is still looking very destabilised, very difficult to make sense of what's happening, and there's some big like tectonic shifts sort of grinding up against each other, and there's lots of things that could play out. So
keep your wits about you. Don't get cocky.
Don't go crazy, yeah.
It's a fast market. Probably don't play until things are a bit clearer. And for me, I don't need to stick my neck out every single week and say it's going to do this next week, it's going to do that next week. For me, I'm like, volatility is so high, I'm just going to be waiting for a signal that it's doing one or the other. And at the moment, it's a bit up in the air.
All right, well, let's leave it there. I did want to leave you with one thought. The biggest debate still with all the just to the side of the market stuff is Trump reading The Art of War from China, and is President Xi got the art of the deal there? Is it a grand game of chess or whatever? Because with Trump, he does talk a big game, right? He's a salesman. He always talks it up. Everything's the best. We're number one. He's that kind of guy. So I thought we could go to political strategists, economic commentators, academics. I thought we'd actually go to Mel Brooks to sum up the situation between often what Trump, the way he displays things and the way that it actually is a little bit behind the scenes. So we'll leave you with Mel Brooks from a classic scene of his film in 1980, and we'll see you next week.
Stand-up philosopher.
What?
Stand-up philosopher. I coalesce the vapor of human experience into a viable and logical comprehension.
Oh, a bullshit artist.
And maybe the baked bean scene after that.